Arun Thukral, Managing Director and CEO with Axis Securities. So Arun, good morning. Thank you for joining us. What is your house view, Arun? Do you think the storm has come and gone, or we still have some more downside left in the market?
Good morning, Nikunj. So I think one thing is very clear that what we are experiencing this year is the roller coaster ride, and sometimes it goes up and comes down relatively as compared to the last year. So this is going to continue. So what we are saying is there will be now consolidation, but obviously with a downward bias. So there will be ample opportunities for investors to buy. And even if you look at the global cues, there are a lot of triggers which may go against us. There are a lot of political things which will happen in the country domestically. So there will be a lot of opportunities. If I look at these events as opportunities, then there will be a lot of opportunities. But yes, if an investor is there, what we are telling him is that you will get time this year to buy good sectors, good stocks. So let's ride this with that kind of a mindset that this volatility is here to continue.
Arun, in the morning we were debating and discussing whether the worst of the print for PSU banks is behind us, and do you think that one now needs to be more constructive about the large 3 or 4 PSU banks, because a lot has changed. NCLT issues are getting sorted out. RBI has given PSU banks some elbow room to defer their M2M losses. Also the bond yield has stabilized and it is off dramatically from the recent high. So do you think there could be a 15-20% trading gain which could be due in the SBIs and the BOBs of the world?
So if you talk about the trading gains, there may be an opportunity at some point of time. But if you are looking at from the investment point, we still are not sure that how are they going to handle the competition, because there is a competition all around from private bank with retail focus, from NBFCs, and they continue to lose market share. If you are going to look at the market share in the coming years, then yes, the private bank with the retail focus and some of the NBFC will definitely do much better. But if you look at the trading gains, at some point of time there may be some opportunities. So I think that is it. That is where we have to look at.
Right. Arun, then how are you looking at the upcoming earnings season, especially the numbers that come in from the IT sector? I think it's pretty much a foregone conclusion that most market participants are working with that this time around also there's going to be an earnings disappointment, and all that earnings will come back sometime or the other. I think that call is receding as the reality of growth getting a bit stagnant from here steps in.
So maybe I will little bit of disagree here, because if you look at last 2-3 quarters, maybe 3 quarters back it was -4%, then it was +10%, then it was +20%. So earning is reversing on the positive side, but if you look at still at the earnings of let's say IT, pharma and PSU banks, then yes, the kind of growth we have seen earlier, that we are not going to see. But other sectors, if you look at retail, if you look at engineering, if you look at metals, so there is an earning reversal, and if you look at the private banks. So net what we are saying is that earning is reversing, and we see high teens in the next at least for the next 2 years. We are thinking that we should get around high teens kind of a growth. So that's a positive sign as far as we look at this.
Of private banks, now it just seems like it's a toss-up between HDFC Bank, Kotak Bank, perhaps IndusInd Bank, where the quality of the book is on a relative basis stronger, and they have really seen a scenario of skeletons coming out of the closet, like has been the case with Axis Bank or ICICI Bank. I know you can't comment on Axis Bank, but how do you look at this controversy doing the rounds, which is in a way ambushing some of the corporate-oriented private banks?
See, this is basically a cycle. So if the corporate cycle turns, then maybe this bank will be the greatest beneficiaries. And right now, what you are overlooking at the retail side of their businesses, maybe the retail side is also growing in a very good way. So over a period of time, when the cycle turns, then these banks may be the major beneficiaries. Having said that yes, there are private banks which are doing much better as of now, and there is more retail focus, there is more you can say the technology adoption and all. But if you look at overall private sector bank, the space looks good. Maybe the cycle sometimes turns towards corporate side, sometimes it goes to retail side, but you have to look at the retail side also in all these banks. So overall, this particular private sector focus will be much higher than PSU banks. So I think if you have to choose, obviously private sector banks will continue to do well, primarily because they will continue to get the market share. That is, I think, more or less certain. That is what we see all around.
Why is IT an avoid for you? Given that this has been one of the street's favorite hiding spaces, that's where there is predictability in earnings. You know, after the management's commentaries all through the last quarter as to how IT numbers are going to pan out, and the market seems to be, you know, finding some cover in the IT names. What with the move of late that you've seen, for instance, in the mid-cap IT pocket itself? Do you not believe that the cross-currency tailwind is going to be in their favor, and that's where you will see some growth coming in?
So what you are saying is, yes, this is the hiding space, or this is a defensive space. So the kind of growth we have seen earlier, double-digit growth, that will be missing. Maybe some mid-cap ITs will do that. But why to get into IT when there are better sectors, when there is a consumption story playing on, when there is an infrastructure story playing on? So why, when there is an auto and auto ancillary story playing on, and the kind of growth we are seeing there, when there are better sectors available to you as an investor, why should you get into a defensive sectors? Maybe yes, at times when there is a bloodbath on the street, people get into IT, but if you look at longer term view, whether we could see that kind of growth in the coming years, or whether we see better growth in other sector, in Indian consumption story, domestic and urban and rural both. So that kind of stocks are available and sectors are available, and you see that per capita income is growing. You see that the kind of demand is there. If you still talk about that only 30% people have refrigerator, or only 11% have got washing machine, only 3% has got ACs. So these are the sectors and stocks which will continue to do much better. So that is why on a relative basis we are saying that IT can be a defensive stock for somebody or sector. But there are better stories available, so why not get into that space first?
Okay. You know, Shriram Transport is another stock which has hit a 52-week high. Bajaj Finance has hit a 52. Is not far away from an all-time high. I looked at even Chola Mandal, which is at a 52-week high. Arun, NBFC in a sense had become an overcrowded trade. But within the NBFC space, the good old expensive names are the ones which have made a comeback. So do you think some of those A-quality NBFC stocks are gaining because money could be moving out of some of those corporate banks and back into NBFCs, because corporate banks have failed to deliver? There are question marks which have been raised on their identity, and there's an identity crisis. So do you think now markets logically will migrate back towards a Chola Mandal or a Bajaj Finance, or for that matter an India Bull Finance?
So obviously NBFCs with the retail focus of or a niche player, they will continue to gain. The only problem with them may be the cost of fund, because recently we have seen when the cost of funds have gone up, so these companies suffered. And now maybe yields are softening, but still you don't see anything coming up in the next 12 months that interest rates will come down. Maybe within 12 months there may be some rise, not immediately if you look at yesterday's policy. But at some point of time, raising fund with the private banks or the corporate banks, they have an advantage of the CASA book. So I think that will play. So they will continue to compete with the NBFCs. Maybe the PSU bank will not have that kind of growth in this space, But if I look at private banks, they will continue to compete with these NBFCs, and as you said, these NBFCs is becoming very, very expensive. So at times in between they'll come down also, because whenever there is a trigger, the investor go and sell this and maybe go and buy back later. But yes, they are doing good business as of now.
Leave it at that. Thanks very much for taking out the time to speak with us today and give us your opinion on the markets as well as the stocks and sectors. We really appreciate your time. Take a break then. All's okay with the markets. You're still seeing stock-specific action and